Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I have been getting loads of requests from the community to check out individual stocks, and I've got quite a few companies now I need to research in the next few weeks, inshallah. I've done some of them already, so I will be sharing with you guys basically in the next few videos. I'm going to start today for the first one. They take quite a bit of time because I kind of need some of the companies I actually have not come across, so inshallah I'm going to do a little bit more research to understand it, because there are two things that I'm looking for normally, is especially when your company is new to me, is the quantitative and qualitative data. So I'm looking at what does the company do, where has it been, so understanding the kind of the business model first of all before you look at the financials. So once I understand what the company does and so on, then I can look at the financials and see if this company is profitable, if basically revenue is growing, EPS is growing, the free cash flow and dividends and payout ratios and all of these things that are, you know, that we normally look for. And then I can say, yes, I understand the business, let's now look at the financial side of things. So yeah, bear with me for a few days, inshallah. We'll go through those videos. And what I'm going to do now is I'm going to talk about the first one. And this is the company that has been on my watch list for the last almost 2 years now, but I haven't actually been able to add to the portfolio. In fact, this probably will be for the family portfolio, but I will be sharing that in the on the Discord, and I will be sharing that with the Patreon as well. So Patreon is still half price, so if you haven't joined us, please do so. You get access to the family portfolio, like I just said. You got the monthly undervalued stocks, which I have just updated, if I can talk. And I think there was about 25 different companies in there that were all undervalued at the moment. And then you got access to the Discord, where a lot of brothers are sharing very good practices. Now let's go back and talk about the company that we came here for, and that is Arista Networks. This is a leading provider of data-driven client-to-cloud networking solutions for larger scale data centers, artificial intelligence, campus and routine applications. The company is actually relatively new, so 2004 is when the company started, and they have their flagship products basically is the extensible and operating systems, or EOS, and which is basically a Linux-based networking operating system that runs across all the hardware platforms, and delivering high performance and scalable and reliable basically networking for those companies. So what I'm going to do is I'm going to give you a little bit of information about the company, but like I've always said to you guys, if you're interested genuinely about the company, just go away and learn more about it, because this is what I would do if I was learning, basically doing kind of like, because otherwise you're going to be, normally when I'm actually researching about company for the first time and I'm really interested, it takes me hours and hours, sometimes days, to actually understand the whole business model of a company. Okay, so what I'm doing now, I'm giving you a snapshot of what I would be doing first. Then, of course, I dig deeper before I actually invest in the company. So I'll go to Seeking Alpha, for example, type the ticker, whatever. Then scroll down, understand some of the business model, what they do, and see if I can actually get a good feel of what the company is actually doing. So right now I've just given you some of the information, is the EOS, or basically all the operating system side of things, the fact that they are cloud and AI networking company. So they provide a lot of these things, but who do they provide it to? That's what I want to know. Do they actually have anyone can write a company profile, but we need to know more about the business itself. So the next thing you will be looking at is revenues and all of that, which we'll come back to in a second. So once I have an understanding of the company, then I'll go to the financials. So that's my next stop, so I'm looking for the revenue side of things. So revenue basically from here to here, I will check that. Okay, so this is the looking at the financials, but there is a step in between. I've just done a very brief information overview of what the company does, but I want to know more. Okay, and what I will be doing is straight away either look at the 10K or the latest earnings report. Latest earnings report will give you some information. So if I was interested in this company, I will go to basically what they reported in February. Okay, so this is their February report of this year. So you can see here they are in the digital transformation, streaming media search. Because this company is a networking company, when it comes to digital transformation, they will have say in it, because remember, we're sending data from A to B, and this is the company that enables us to do these things. Streaming media search, again, because Netflix is now doing a real life basically events. Okay, it's no longer on demand. Okay, so it's more now live streaming videos and so on basically all the fights and so on. this company is in the right place to be able to provide networking basically environment for this company. We got the secure access service edge, for example. Again, this is another cybersecurity side of things, making sure all the basically the networking itself is very secure, because a lot of hackers are doing all these kind of things. Then we got hybrid work and also return to office side of things. So the RTO is basically return to office. So we've got that is happening right now. So a lot of people are spending time at home, basically also having access to the same networking as they had back in the office as well. So you got that. So all of this is basically a bullish basically case for this company. Then you can look at a little bit more detail about the company and what they do and so on. And then in here, they've actually kind of given us a little bit breakdown of some of the things that the company does, and basically the operating system type, basically the stack evolution kind of thing, basically what they have been doing. I think this is the network link, data lake, for example, is basically one of the products that this company provides for other basically companies. This is where it becomes difficult, because if you are in this type of work, for example, this will become easy. And for me, a lot of these things, I know what they are because I'm in that sort of a world. But for example, when I look at basically companies, for example, pharmaceutical companies, and I see stuff like this, I'm like, what does that even mean? I don't understand any of the names of drugs or company, like how much. I can understand how much they make from that basically drug itself, but I don't understand if there's a demand for it or what it's used for and so on. But so you can look at the company, and if there's things that you don't understand about the business, then of course research a bit more about the company. One of the things I actually would suggest is that you listen to the latest earnings report, because they do talk about individual products that they came up recently and how it's benefiting customers and who the customers are and so on. So you got, like I've already said, the data centers, the campus center, the WAN, for example, or wide area network inside centers, and you got AI centers as well. So all of this is basically this company provides networking devices for all of these places, and then there is more. Okay, leading distributor across the networks, and then you can see what they do. So wide and wireless access, zero trust and security networking, scalable back end training, and so on. All of these things is part of this, basically what this company is trying to achieve. Now, this is what I was talking about earlier, real-time, for example, data side of things, or real-time streaming. If you think about it, that's something that's basically network-based companies like Netflix is doing right now. So there's a lot more of that coming in the next few years. I'm sure a lot of these, on-demand companies are now going to change and try to copy what basically Netflix has done. And then, of course, there's other companies that use the ecosystem. And one of the things that I've actually discovered about this company while I was doing the research is the fact that 20% Microsoft basically has increased to 20% from 18% from previous year. So Microsoft is actually one of the big companies that actually use this company, but 20% of their revenue comes from Microsoft. That's a lot. That can be a good thing and a bad thing at the same time. But yeah. And this is the data enterprise and data center portfolio. So these are the devices this company owns. And there's a lot more. So they work with companies like Broadcom, for example. And the rest of this basically becomes a little bit more technical. So you're talking about things like lossless networking and so on. Then you're basically talking about the connectivity, how the speed of it, the CPU based data centers, AI data centers, and so on. And basically this is a lot more technical, if you like. But again, it gives you an idea of what the company does and who they work with and so on. So that you can see here, basically some of their customers include basically AWS, Azure, for example, Microsoft, Cloud Visions, and so on. And there's still more information. So it says Arista is leading Wi-Fi 7 transition, and you can see basically what they have actually done and so on. So yeah, there's a lot more information if you're interested to learn more about the company. But once you've done that and you've had enough at least and understood some of the company details, then you need to go to the financials and then look at the revenue side of things, from 8 million to right now 7 billion. And of course, 2.5 billion of that is the cost of the revenue in trailing 12 months. Gross profit of $4.4 billion, which is really good for the company like this. And then when you scroll down all the way here, you will see the net income. That's what I'm looking for. $2.8 billion of basic net income right now, and basic EPS basically has grown from basically 11 cents to right now $2.27 for the last 10 years, which is really nice to see. Now the other thing we need to look at is the balance sheet. So normally I look for things like the debt levels, you look for the current assets against current liabilities. So total current asset of about $12 billion against total current liabilities of 2.7. So the assets basically are more or less, where is it again, total current, so 11 to about $12 billion against basically 2, which is absolutely fine. And then as you can see here, total liabilities only $4 billion against total assets about $14 billion. So there's nothing to worry about. And you can look at for things like the long-term basically debt, for example, or total debt, for example, from here to where we were to right now where we are, basically very, very low levels of debt. Now free cash flow is the other thing I would be normally looking for, and if you go to the cash flow side of things, you can see here basically what free cash flow looks like from the millions to right now $2.8 billion of free cash flow, which is really nice to see. The other couple of things I'm going to look at quickly is basically they reported the earnings recently. So they basically 25% up a year over year, which is really good. They beat the top line and bottom line, both of them. And they actually guided slightly higher. If I can find the outlook for the company. So the company revised its 2025 revenue growth outlook to 17% or $8.2 billion, and up from the initial guidance range of 15 to 17. So the initially they said we will do about 15 to 17. Then they came out and said, you know what, we are going to do 17 this year. So this basically optimism is basically based on the demand for basically across AI, cloud and enterprise sectors. And for Q1 2025, the revenue guidance is $1.93 billion to $1.97 billion, with gross margin estimated of approximately 63%, which is absolutely amazing. And that's the difference between we've seen the cost of the revenue and the revenue itself that we've seen. Margin, basically operating margins of 44%, which is absolutely amazing as well. And they reiterated the commitment to a long-term gross margin range of 60 to 62 in 2025. And I like that because that's the basically company that's becoming a bit more efficient. You can pause the video and have a look at the financial results, what they've reported recently, and then you can see some of the questions and answers, things that have been asked to the CEO and so on, and the analysis and whatever. So you can pause the video, have a look at it, basically to give yourself a little bit more research. But I want to now switch to looking at the company itself and in a little bit more detail. The 104 billion market cap, it has a wide moat, beta is quite high. This is probably one of the most volatile stocks that I've seen in the S&P 500. PE right now, and I say that because I've seen it basically fluctuate between 4%, 5% each day, especially when the down days or up days, depending which one. So current PE is about 37, the forward PE is 33, and the 5-year average is 36. So the stock is around where it has been over the last 5 years. The sector median is about 22. Free cash flow right now, $11.8 billion. Is that actually true? I knew that didn't make any sense. The free cash flow is $2.8 billion, and the 5-year growth rate for that, compound annual growth rate for that last 5 years is basically 29%, which is absolutely huge. Profit margin, return on equity, return on invested capital, probably one of the best out there. Return on invested capital of 31%, again absolutely amazing. Net income margin or compound annual growth rate for the last 5 years 32%. Revenue growth of the last 5 years 23%. EPS growth 36%, and current ratio is up way above basically that one that we're normally looking for, and that was the current liabilities against the current assets that we've already seen. So we almost $12 billion of current assets against the liabilities. That was what, $2 billion or whatever it was. So the company, in terms of the profitability and what the management is doing with the basically the money that we invest into the company that receives or whatever, it's actually doing an absolutely amazing job. Now we need to look at the valuations and see if this company is actually trading basically if we can buy it right now. So they're expecting the earnings to grow about 9% next year, and the revenue growth basically they're expecting about by the way, this year 2025 they're expecting the earnings to grow about 10% and revenue about 19%, which is really good, absolutely amazing. I like the fact that revenue is growing really fast. I like that. Current price is $83 per share. According to Morningstar, they're saying it's about right now it's flat basically, or more or less. According to Simply Wall Street, it's more or less the same. So again, another $83 per share when it comes to Refinitiv ratings, for example, they said it's 106, but they use also analysts, so that's why probably they slightly higher. And the same goes for TipRank, same goes for Seeking Alpha. All of these companies use more or less the same people, the same analyst data, so they are kind of very similar when it comes to that. Now, in terms of Sharia compliance side of things, there's nothing to worry about. Again, I say nothing to worry about because if it goes below 2%, basically goes to 94%, then that means we can no longer invest in this company. It has to be less than 5%. So it'll be interesting to see. Basically, we'll keep an eye on that in the next couple of years. But interest-bearing debt is almost non-existent. Interest-bearing securities is just below just 6%. They have been buying their share, basically diluting the shares, but they expected to dilute it again a little bit. Now, this is probably still on the growth side of things, so that's probably why they're still diluting shares. I really don't like when the companies do, but yeah, maybe they think the stock's too expensive right now and they don't want to buy back their shares and they just want to sell it. Instead of going to the bank and getting a loan for the business, they probably prefer this. We've got two more things. So final valuation. So we got the Morningstar valuation, Simply Wall Street, Seeking Alpha, and we got the discounted cash flow model. All of them gave us about $80 something apart from Seeking Alpha. That gives us intrinsic value for this business $95 per share. Now, if we say, for example, we're happy to buy this stock right now, the no margin of safety, you can go and buy it right now. But if you say, you know what, I need maybe 10%, okay, then you might just have to, because you can buy it right now. But look, for a company like this, I would definitely say you need about 20% margin of safety, considering how volatile the stock is. So 20%, that will be about $76 per share. Basically, current price is only $83 per share, so that's not even far off. So I would definitely wait until it hits that. And for me, my price was $75 per share that I put up basically for the couple of weeks ago. So I'm gonna wait. If it hits that price, then of course I'll let you guys know. I'll probably add it to the family portfolio, and I'll give you more information on basically when I do. And the final thing I want to share is basically how this company has performed over the last couple of years. We're looking for the total basically return, and we're comparing it with a couple of the networking companies with the same sector as well. So for the 1 year, as you can see here, it's only 9%. The S&P 500 is 8%, and the Cisco has done 24%, and this one has done absolutely nothing for that year. For 3 years, okay, 152%. The S&P 500 27%, Cisco has done about 18%, and Jupiter basically has only done a 10%. Now the next one, last 5 years, 721%, and this is where this company shines in comparison to the S&P 500 of 153% total return. Last 10 years is even better, almost 1,859% in comparison to what you can see here. So it's done absolutely amazing over the last whatever years. So there's a lot more information I would be looking at if I were you. One of the things that I'm looking at right now is basically Wall Street praise, basically the fact that they're praising this company. And one of the things that I want you to note is this company's Meta has basically slightly declined the revenue they were getting from Meta, or basically Facebook, has a slightly declined from what it was to where it is right now, whereas Microsoft hasn't slightly gone up. So this one of the things I worry about when it comes to this company is the fact that all the big boys, okay, the hyperscalers, for example, use their network and so on. But if these companies have a history of performing of creating their own basically devices when it comes to this type of things, we've seen with chips with that, basically the M1 chips from Apple, for example. So that's my only main concern. But the same thing can also happen to Broadcom and Qualcomm and all of these other basically companies that work in that sort of a field, the chips and so on. So yeah, overall, I genuinely think this is a great company. It's, as you can see, basically, or three of them are saying it's a buy right now, and we've already seen a lot of the financial details. What I would definitely do if I were you, if you're really interested in this company, dig deep and understand basically how they make money, and of course basically look at their customers and so on, and look at the competitive landscape, like what other companies are in that sector. Is these companies actually better than, what are some of the risk, for example? Okay, is the risk just to, if overall market, if the AI situation does not become a thing, then we are in trouble when it comes to this company, because all these chips, all these networking devices devices they're making right now, the Ethernet cables that they're trying to enhance and add a bit more AI to it, will they be, attractive? Will they sell them? Okay. So in summary, Arista is a great company. It has a robust financial performance driven by its innovative networking solutions and a strong relationship with major technology companies like the Microsofts and Facebooks and so on. And they are talking about a lot about AI and changing a lot of their devices and integrating some sort of AI into it. So I think they are genuinely in the right field. But of course, like I said, I genuinely believe that we need at least a 10% pullback maybe in the next few months, and a year to date is actually down almost to 25%. So that's about 3 months. In the next 3 months it goes down another 20%. I'll probably be very, very interested in this company. Right, I'm going to stop the video here. Please like the video, subscribe to the channel if you haven't already, and join us on the Patreon account. Basically it's discounted right now, where you get access to the Discord and everything else. Inshallah, have a wonderful day. Assalamu Alaikum.